Welcome to Careers Under Construction. I'm Justice Peterson. This podcast explores insights into building companies and careers from the ground up. On this episode, we speak to Kris Thorkelson, the founder and owner of Thorwin Properties. We find out how a pharmacist by trade became an e-commerce millionaire and now holds one of the largest real estate portfolios in Winnipeg. Tune in, he might just be your landlord. Please enjoy Kris Thorkelson. First thing I wanted to ask is, are you born in Winnipeg? Yeah.
Yes.
Yeah. The reason I ask is Kristjan Thorkelson. You've got a J in your first name, and then it ends in son, like Peter's son, my last name. It's got kind of like a Scandinavian ring to it. I'm Norwegian. Are we fellow Vikings potentially, or?
We are fellow Vikings.
Yeah.
Most of my DNA is from Norway, but my ancestors are all from Iceland.
No way.
Yeah.
Cool. Great. So today I wanted to talk to you about your career, obviously. I think it's a very interesting one. It's almost like out of a movie. Like, you started out as a pharmacist into like .com entrepreneurship to real estate empire. Then I have some questions about like real estate investment, because some of our audience, myself, I obviously have a keen interest in it, but there's just a lot of people out there that like, they don't even know how to get started, right? It's such a hot topic. Such an interesting side hustle that people want to get into. So I do have some questions on that, but let's start and rewind all the way to the beginning and just tell me about how you got started as a pharmacist in your career.
Yeah, I started in university right after high school, like most people, and I was
Right.
interested in sciences. So I did all the prerequisites and decided to go into pharmacy school. So I graduated in 1991 and became a pharmacist. And then in one of my very first job interviews, the owner asked if I wanted to buy the pharmacy. So I partnered up with a friend of mine, and we both bought that first pharmacy. So after 3 months of being a pharmacist, I owned a pharmacy with a partner.
Wow, no way.
So I was thrown into the business world very quickly, and I was 23 at the time.
Okay.
So that started my entrepreneur
Yeah.
career. And within 2 years, we owned 3 pharmacies with myself and 3 partners. And then we had a split, and I ended up with 1.5 pharmacies that I owned, and continued to develop business. And I ended up buying out the one partner, and it ended up with 4 clinic pharmacies that I owned, as well as 2 small medical clinics attached to the pharmacies.
Oh, cool.
And I did that for a number of years. And then the internet was developing at that time. It was still in its infancy in the late 90s. In 1999, I remember I registered some domain names, and I did a little bit of research into the online pharmacy world. But at the end of 2000, my first business partner, we were no longer partners at the time, but he started an online pharmacy.
Okay.
And he was having some difficulties with the regulators. So he phoned me one day, or we were transferring a prescription or something.
Right.
But I talked to him, and he invited me to come over to his pharmacy, and he wanted to show me how it worked. And he said he really was encouraging me to get into the business because he needed somebody else to be doing it, not just him against the regulators. He felt it would be better if there was strength in numbers in the business. So I thought about that for quite some time, a few months, did a lot of research, and decided to start that business.
Yeah.
So in April of 2001, I started my website, canadadrugs.com,
Cool.
and it just grew so rapidly from then, and it became very successful.
Yeah.
Uh,
Interesting. Like I think about that from like you're a pharmacist working in a pharmacy, one patient comes up, you fill that prescription, move on to the next. It's kind of like a one-to-one function, right? And then you do this whole thing where you shift that to online. It must have been like very scalable very quickly. Is that why you're saying like it blew up so quickly?
yeah, it blew up very quickly. We had many challenges regulatory wise and with drug supply as well.
Right.
Uh, the brand name drug companies didn't want to sell to us because they wanted to protect their margins because we were selling to the United States
Okay.
primarily, and their prices in the United States were dramatically higher.
Right.
So they didn't want us cutting into their profits, or that's how they saw it anyway.
Okay.
And it was true. So we were saving money for many Americans
Yeah.
throughout the whole tenure of that website, and it really helped to create our success. So it's quite a sort of a tumultuous time throughout the existence of that business
Mm.
because of the regulations and the drug companies. Uh, they were constantly threatening my business with legal letters and the threat of lawsuits and um, many challenges with regulations. Uh, so it was quite a challenging time.
Yeah.
Um,
So you started that with you and a partner. Like how many staff did you end up growing that to?
yeah, I didn't have any partner. We stayed independent,
Oh, okay.
uh, and I grew it. I had about 500 staff here in Winnipeg at one point. Uh, then there was Medicare Part D came into the United States, which is a benefit for seniors in the United States. So that came, I don't remember the year, but within a couple of months, I cut down to 250 staff in Winnipeg
Right.
because the work was gone.
Right.
Um, because there was an insurance for seniors in the United States at that time.
Okay.
Uh, and then after that change, uh, we continued to grow. We started shipping from other countries and into the United States through pharmacies in different countries: Australia, England, India, and we continued to grow. And I got up to about 500 staff again, but in 5 different countries, including Canada.
Oh, very cool.
Yeah,
Wow, that must have been a handful managing 500 different staff members
yeah,
all over the world.
it was challenging. We had a very good team. I had a very very good senior management team, and really finding those key people and giving them room to grow
Right.
and excel, and which worked very well.
Good.
Yeah,
Interesting. And so then how long did you run that business for, Canada Drugs?
from 2001 to 2018.
Okay.
Yeah,
And Thorwin, you started Thorwin Real Estate when?
in 2010
Okay.
we had excess capital from my primary business
Right.
and really was looking for a passive real estate investment. We looked at the various classes of real estate and thought multifamily was the lowest risk
Mm.
because of the multiple number of residents
Right.
that you have, so it reduces the risk in that way. Um,
Like so many doors under one roof, essentially, is what you
well,
mean, or?
you lose one resident and it's fine, but
Right.
if you have a large industrial property and you lose one tenant,
Right. Right.
it's
Right.
a different story.
Okay.
Um, so and of course there's other challenges with multifamily real estate, but uh, we thought at the time that was the way to go in
Right.
multifamily, and was just looking for a very passive investment.
Right.
So we bought our first property in 2010, and at the time bought it with a partner, and the second property was later in 2010.
Okay.
Um, and that property the second property in 2010 was a 220 suite building. So it was a much larger property.
Wow.
Um, Initially, I had a very hard time even having brokers respond to me or take me seriously.
Why?
Well, they always want to sell to someone who has the ability to close,
Right.
in sort of a known entity that has the financial ability and the will
Right. Right.
to get the deal done.
They're probably not used to like somebody who's like a first time real estate investor saying like, oh, I'm interested in a 220 unit building.
No, it was a bit of a challenge, and even for them to think that I had the capital to do it, it was a challenge. After buying that first large property, then people would email me or call me or
Right.
but even still, it took several years
Yeah.
for the different brokers and owners to know who I was or
Yeah.
that I could buy a property.
Interesting. So,
Yeah.
so you mentioned earlier, like you took some excess capital from your primary business
Mm-hmm.
and started Thorwin. So Thorwin was almost like a side hustle at this point, like a side
Yeah.
business.
Yeah,
You
it
mentioned
was.
like a passive investment.
Mm-hmm.
So were you like when you bought like a lot of people usually buy for their first property like a house or a duplex or a townhome or something, not an apartment building.
Mm-hmm.
So when you bought your first apartment building, were you managing it yourself, or did you go out and immediately hire a property manager? Like who was taking care of that side of things for you?
Yeah, we initially had a property manager for 3 years, Park Dorchester at the time,
Okay.
and then we weren't happy with them, so we switched to Towers Realty
Okay.
for another 3-year period.
Right.
So for those initial 6 years, we had a third party managing all the properties.
Interesting.
Yeah, and we were still fairly involved in the reporting and the decision making process for the
Yeah.
buildings, but we had a third party manager managing everything.
Interesting.
Yeah.
How many units was the first building you bought? Do you remember?
I bought a 12 unit on Midwinter and a 48 unit on Edison. Those were the first two. And then
Why were those attractive to you? Like the smaller apartment buildings, like did you like purchase it at a low price where you felt like the rents were gonna like you were gonna cash flow a lot, or like why those buildings?
yeah, certainly the pro formas look good.
Yeah. Yeah.
In hindsight, the pro forma is one thing, but can you actually achieve those results?
Right.
So what's available to buy? It's in Winnipeg, the quality properties, they don't come along very often. Like it's a challenge to find good properties that are looked after well and in good locations and have potential for the future.
Okay.
The sort of lower income parts of Winnipeg, the buildings do transact much more frequently.
Yeah.
Although now I see clearly I don't want those properties.
Right.
Because they come with so many challenges.
Okay.
Which result in poor financial performance.
Yeah.
And so those parts of Winnipeg are really challenging, and they become more challenging with with the drug epidemic that we're in right now. It's really challenging.
Yeah. I want to come back to that performance aspect of your investments in a bit. I want to go back to like 2010, you started Thorwin, and you mentioned in 2018 you stopped at Canada Drugs. So in 2010, you had a few, like 100 or a few hundred units. And to today now you have, I think it's like over 2,500 units over the last 15 years you've acquired, which is unbelievable growth. Can you kind of like just walk us through this like 15-year period of growing Thorwin? Like obviously the units have grown, your team has grown. You've probably taken a lot of stuff from outsourcing to in-house. Can you just walk me through that journey a bit?
Sure. We We really grew, to my mind, fairly slowly. Well, not slowly, but in steps,
Mm-hmm.
and gradually, one piece at a time, and really trying hard every day to do the right thing each day, and growing the team of the team at Thorwin. Uh, I continually strive to improve that team and improve
Mm-hmm.
the quality of the team. We we had the capital to continue to purchase properties, and we tried to do it in a measured way. Uh, in hindsight, some of the properties didn't perform as well as others. Um, so the first 6 years of owning Thorwin, we used third-party managers to manage the properties, and I could see quite clearly that the third-party managers, their interests don't always align with the interests of the owner, and with the goals that I have as an owner. I really want a quality property and a quality experience for the residents.
Right.
And the third party manager doesn't necessarily align with those goals,
Okay.
and with our financial goals as well.
Right.
So we took over the management completely ourselves after that 6 year period. So it was about 2016 when we took over the management. And that at that time, I think we had maybe 800 units, something around that number.
Okay.
So it wasn't a very large portfolio, but still, it was significant enough that we could create a small team and manage it ourselves. There was enough scale there that
Yeah.
we could manage it ourselves. Maybe not super efficiently, but at least it was ours, and we controlled everything.
That's funny. You say 800 units is not a very big portfolio. I look at that as, I mean, obviously depends on the lens you look at it, but to me
Yeah,
that seems like it's, in
but
only a
you need
5 6 year
enough
period.
scale to, if you're going to manage it yourself,
Right.
you need enough scale to make the numbers work.
Right.
And probably 500 units or more, really, you need that to do it yourself, unless you're very small, and then you can just do everything yourself. But once you start hiring people,
Yeah.
there's sort of a number in between there that it's just not efficient to do it yourself.
Right. Once you start hiring people, you got to get to volume.
Yeah,
Right.
yeah.
Yeah.
Otherwise, it creates challenges, and you financially can't get to the right numbers.
Right. Right. Okay.
So, and after we went on our own with property management, we continued to slowly grow and purchase buildings,
Yeah.
sort of through the years. And
And that's your primary business model is like acquiring existing buildings, like
yeah,
older commercial buildings or older multifamily buildings, renovate them into like modern day affordable apartments. Is that right?
essentially that's right. Yes,
Okay.
we have dabbled a little bit in new construction. We have one project ongoing right now. Um, I do see there's sort of a missed opportunity with the older stock in Winnipeg. There's still a lot of older buildings in Winnipeg
Mm-hmm.
that really need improvement. They've been neglected. There's a lot of deferred maintenance. All the building systems need to be replaced, and they're really aging.
And you find that to be a pretty good opportunity to spend the money on getting them up to par as opposed to just
Mhm.
buying land, developing new, and having new construction.
Yeah, it has, to my view, lower risk.
Yeah.
Although it is very, very challenging to buy an older building and do all the renovation work and make the financing work so that you can buy the building and do all the renovations. Financially, to make all that work, it can be very challenging.
Right.
And there's existing residents that you need to be very aware of, and it's it's a necessary thing to improve these buildings, but managing it well and doing it well
Mm-hmm.
is quite challenging.
Yeah.
Yeah.
Yeah, I guess like if, I'm a resident in a building and you're renovating or doing construction on, for me to want to stay there long term, you really got to be thinking about the tenant during that time. So you're really focused on like the quality customer service
Hmm.
and tenant appreciation.
Yeah, and we have a mixed experience. We have a group of residents that really want the new construction, the improved building with additional amenities, or we typically always add a dishwasher, and we add air conditioning,
Right.
we add internet to each suite. So we make these changes and replace all the cabinets and flooring and the bathroom, and really make it a new suite. Almost it's in an older building,
Hmm.
but and it's a uh, really an upgraded suite at a lower price below the new construction, the new buildings.
Right. Okay.
Um, they're substantially higher rent than we than than our price point. Um, so we really provide a good value offer to people.
Yeah.
Um, one challenge is the existing residents in the building, as we're upgrading it, they may not be able to pay that higher rent. So that is a challenge that we
Hmm.
face. Um, so we certainly work with the residents and try to assist them in any way we can. We move people within our portfolio of buildings.
Nice.
We have a regular number that are transferring to other properties.
Okay.
Sometimes because they got a new job,
Right. Yeah.
or they moving in with a roommate, or
Yep.
various reasons.
Right.
But also because if the rent becomes unaffordable, we try to find a solution for them
Hmm.
if we can. Um,
Yeah, because you have buildings in all areas of the city, right?
yeah, we
And
have quite a good selection now, and we have a number of buildings that are under an affordable program.
okay.
So that uh, can be a good option.
Nice.
Um, it
Interesting.
it does depend on the situation,
Cool.
but
So this is 2016. You brought your property management side in house. And then it's not too long after that, 2016 to 19 or so, like COVID hit.
mhm.
How did that impact your business?
Yeah, COVID was very, very negative. It really drove up vacancy,
Yeah.
and we had to reduce rents on many units. Created substantial losses for us, actually, and we received no government funding whatsoever
Mm,
during that whole period.
wow.
Um, However, I knew that COVID would end and we'd get back to normal. I mean,
Yeah.
that was pretty clear to me. So we continued to renovate and maintain our whole program. And once COVID ended and immigration really ramped up, the federal government was really uh, had the immigration numbers increase,
Yeah.
and provincial programs as well, foreign students, temporary foreign workers.
Right.
So we had a huge increase in demand. And it was very sort of fortuitous that we kept our renovation program going.
Right.
And so we had renovated suites, and it really worked well. People really prefer those suites, as long as it's within their budget, of course.
Yeah.
But
Yeah.
um, and we have a tremendous number of new Canadians in our apartments.
Hmm.
I don't know what the percentage is, but
So with that high demand, then was it a good time to be acquiring other buildings? Like, was it from an investment standpoint and growth standpoint? Would you say that
mhm.
your company kind of like took it to the next level during that period? Or
Yeah,
yeah.
after COVID, after the pandemic ended, there were a number of owners that really started to think, "Is this the time to sell?"
Right.
Because they had gone through the pandemic, and it wasn't very healthy for multifamily owners.
Yeah.
And then the federal government announced the change to the capital gains tax, and many owners who had owned buildings for quite a number of years saw the tax hit that would cause, and several properties came for sale because of that capital gains tax.
Mm-hmm.
The federal government later rescinded it,
Right.
but a number of properties transacted because of that tax, and also the sort of that the challenges through the pandemic, and then these buildings, many of them had so much deferred maintenance,
Yeah.
and they needed capital investments,
Yeah.
and the owners just didn't have the capital, or they didn't understand the process, didn't want to go through all the challenges of renovation
Yeah.
and making the project work. And it is very, very challenging to renovate a whole building. It is.
Oh, absolutely. I'm sure it
Yeah.
is. And that capital gains tax is interesting because I know in the States, in the U.S. anyway, they call it like it's like a 1031, right?
Mm-hmm.
Where if you sell your property, you don't have to pay any capital gains, or you can defer them as long as within 6 months you reinvest that money back into like a like-minded, similar type of property,
Mm-hmm. That's right.
right? But here in Canada, it does not work that way.
No.
They're much harder on investors that way.
Yeah, you have to pay the tax, and
Right.
that's it.
Right. So like even if you're going to take the money out of one building, sell it, and you're going to reinvest into something similar, you're still paying that capital gains tax regardless of whether you invest it or not.
Unless
It's not deferred down the road.
unless you own, depending on your structure, your corporate structure,
Right.
if you can maintain that ownership within that corporate structure.
Okay.
So I mean, you need the person need good tax advice on that.
A good accountant.
Yeah. I mean, several of the properties that we've bought in the last few years, it was, the children had inherited, the father had built it in the 1950s or,
Right.
70s, and has passed away, and now the children have inherited it. They've owned it for a period of time, and it's not their business, and
Right.
so those sort of situations have triggered sales, and the capital gains tax change really sort of pushed that forward. I think these people were probably thinking about selling their properties for quite a while, but it's sort of, well, geez, if I'm going to pay all this extra tax, well,
right. May as well do it now.
May as well do it
later.
now. Yeah.
Right. Okay.
And that wasn't the only reason. There were certainly other properties. They come for sale for various reasons.
Mm-hmm.
But quality properties in Winnipeg, they don't transact a lot. It's this very, very slow process. A lot of it is held for a very, very long time.
Right.
The good quality buildings in Winnipeg, they don't sell very often.
Okay.
Yeah.
Did you ever do single family homes, or was it always all multifamily?
Really didn't buy any single family, other than I bought a few for potential development purposes, or that sort of thing, or for parking or something like that.
Okay.
Like if it was right next to one of our buildings, something like that.
Okay.
But yeah, single family, it's renting single family in Winnipeg, I don't know, is very, very difficult. I just can't see how the numbers would really work for that.
Yeah, especially today. Like, I don't know if you remember back to like 2010 or 2012 when you first started this, and what the interest rates were like, but lower than today, right? So the interest rates were lower. The cost of housing was certainly lower, obviously, back then. But today, there's that combination of like higher interest rates, sitting around like 4.5%, 5%, higher cost of housing. And when you have both of those things working against you, it's really hard to buy a property and then rent it out with any cash flow whatsoever, right? Like,
it is very difficult.
Like my wife and I, we bought a rental property in Westwood about 8-9 months ago now. Bought it for $400. Our mortgage on it, we put a decent amount down. Our mortgage on it is about $1,500 a month. But then when you factor in property tax, insurance, the extras, it's about, our expenses are about $2,200 a month on that. And, we might be lucky to rent that out for $2,500.
Yeah.
Right. And that's if we're lucky. So, the cash flow is not certainly not great on those types of properties.
No. And the maintenance is more.
Right.
And if something goes wrong, you've got to pay for it. It
Right.
it it all adds up. It's a challenging situation.
Yeah.
With an apartment building, at least you have more scale. You can spread out the costs, and
Okay.
it's more workable. Um,
Hmm. So like I know that there's a couple different types of like real estate markets, right? There's people that are looking for cash flow, people that buy for appreciation, right? Like some people will buy a house, not worry too much about their cash flow month to month if they rent it out, but bank on the fact that it's going to appreciate in a major way over time. Or
mhm.
there's some people that, they want to buy a house super cheap, rent it out for as much as possible, and pocket five, six, seven, $800 a month if they can cash flow. Like what obviously it's great if you can get both, but like what's your strategy or what's your take on that?
Yeah, really, you should always buy for both. I would say
Right.
it's got a cash flow and have long term appreciation.
Mm-hmm.
Uh, Real estate is e- extremely long term, and to buy for a short period of time and be successful at it is extremely difficult. Even a
Yeah.
5 year period,
Right.
really, to, in my mind, it's got to be 10 years or more. Otherwise, it's just so difficult to get past all the costs
Yeah.
and the fluctuations in the real estate market and the economy. Um, so it's really a long-term vision
Okay.
that's needed, particularly in multifamily, I
Yeah.
find.
Yeah.
Uh,
Yeah. I find that, interesting. So obviously it sounds like you take a little bit more of like a conservative long term approach.
yes,
Um,
very.
yeah. Like I think there's a lot of people that when they think about real estate or getting into it and purchasing their first property, they think, I'm gonna buy this house, this duplex, this townhome, whatever it is, and I'm gonna hold it for 30 years, and then I'll sell it, and that's kind of like my retirement plan,
Mm-hmm.
right?
Mm-hmm.
And there's nothing wrong with that, absolutely nothing.
Yeah.
But I do also know some like larger real estate players that don't do that. And they buy a property 5, 6, 7 years later down the road. They're like trading up for equity or they need more capital for a different opportunity. So they're
Mm-hmm.
constantly like moving, shaking, making deals, things like that.
Yeah.
Like what is your kind of strategy around like being more conservative, being a little bit more risky to trade up? Like you have a lot of big buildings. Surely you
Yeah.
can't just buy everything and hold it forever.
Yeah. I have a mixture. Many buildings that are 15 to 30 suites as well.
Okay.
But yeah, I really have a long-term view about real estate, and buying and selling has such a cost to it,
Mm-hmm.
and it creates such difficulty. Um, and it's holding for the long term where you really see the appreciation. However, you really need the right assets to hold long term. So if you don't have the right assets, really, I do see why people would want to sell.
Yeah.
And
Yeah.
if you don't have the right assets, you have to make that decision and trade up or find a different location. It might be the same type of asset, but in a different location that'll work much better.
Yeah.
Um, so yeah, really, to me, buy and hold. Once know I have the right property.
Yeah. Yeah.
Yeah.
It's interesting. So like you're kind of leaning towards like your more conservative approach.
Hmm.
But when I look at you from like an entrepreneurship standpoint, I think like sure he says conservative, but you're also a risk taker because you can't just go out and buy any building without having to take a risk, right? There's a
Hmm.
risk in every investment you make.
Yes.
And
Yes.
it's kind of funny, like in my mind, I consider myself to be a bit of a risk taker. Just like I don't gamble, but I look at it as like I'm a gambler. Like, and I don't mean that in a bad way, but just like I'll try anything, right?
Hmm.
Like I'll start a business. I'll try and start a podcast here, right? I'll take a flyer and take a chance on pretty much anything. And I had a friend actually ask me the other day, like why are you starting a podcast? Why are you doing, why are you investing money in this real estate house? And I'm always like, well, like why not? Right? Like
Hmm.
I feel like to get further in life, you have to, continuously take action and you got to take a chance on something.
Hmm.
So I find like your strategy that although you find yourself conservative,
I
you've
wouldn't.
obviously taken a lot
I
of
wouldn't
risk too.
say I'm conservative per se. In some ways, I am
Okay.
maybe, but yeah, I'm. clearly a risk taker.
Yeah, yeah.
And we really have changed. I bought quite a number of buildings in the lower income parts of Winnipeg,
Right.
and I could really see the extreme difficulties that we had in managing them and trying to provide a quality place for the residents and all the challenges that we had. So I sold, I think, 9 of those buildings,
Hmm.
and I have a couple more for sale right now. And I might make some more changes to the portfolio,
Yeah.
um, just depending on location. Probably 10, 15 years ago, I had a vision that certain parts of Winnipeg would gentrify and improve,
Right. Yeah, yeah, yeah.
and that has not happened. I mean,
Yeah.
it's just very unfortunate. There's certainly been improvements in some areas,
Yeah.
but I don't know. I really think, would I want to live in this location? Would
Right.
my family member want to live in this location? Um,
Yeah.
and I have to say yes if I want to buy that property.
Yeah. It feels like we've been waiting for a long time for downtown Winnipeg to, really come back.
Yeah, yeah, and downtown isn't quite back to the way it was before the
Mhm.
pandemic.
Mhm.
Although it has improved, it is getting better
Yeah.
slowly, and we do have a few buildings downtown, and uh, I can see. I I think it'll improve more.
Yeah.
I think it is getting better,
Interesting.
um, but we have societal issues. It is how it.
Yeah.
We have to be aware of it.
One building I was driving by the other day, which I actually wasn't aware was one of your properties, was the old Louis Riel Hotel.
Yes.
Now it's a Thorwin Properties building. Like when
Hmm.
when did you purchase that? And that must have been quite the undertaking because
Hmm.
I stayed in that hotel like 12, 13 years ago. And when I stayed there, it was really run down.
Yeah.
Really run down. And obviously that would have been a building I'm sure that you completely renovated.
Well, it was renovated prior to me purchasing it, actually.
Okay.
Yeah, they went through a full rehab, uh, what the rental tenancy branch calls a full rehab,
Right.
and that was, don't know the exact year, but it was prior to Thorwin buying it,
Mm,
and we've owned it for about 5 years, I think, 4 or 5 years.
okay.
Um, we have done a lot of renovation in the building. It had the old curtains from when it was a hotel, and it had the same some of the same carpet from when it was a hotel
Yeah.
in different suites. So we've removed a lot of the carpets. We tried to remove all those old curtains, um, and now we've done with this year. We changed all the elevators because they were original from 1970, I think,
Wow.
and all the HVAC through the whole building this
Wow.
year.
That's got to be a pretty heavy
It was a
expense.
massive investment, yeah,
Yeah.
a very, very large investment, yeah,
Wow.
and quite disruptive for the residents. So it's just about done now. So
Oh, that's good.
yeah,
So the ones that stayed they're probably going to stay long term now that it's all,
yeah,
improving that
we
way.
did lose some people with the elevators being down, and
Right.
the air conditioning wasn't working correctly for certain periods, and it was quite challenging
Hmm.
doing all the HVAC replacement in the elevators.
Hmm.
Yeah.
So while we're on the topic of like downtown Winnipeg and just like locations for investments, I'm curious to hear your perspective on this because I had a conversation recently with my accountant.
Hmm.
My accountant has a few rental properties that he owns, like nothing like your portfolio, but I think he has about 10 houses.
Hmm.
And his kind of motto is I never buy in an A neighborhood or really a B neighborhood like a Tuxedo or a Charleswood, let's say. But
Hmm.
I'm really, really focused on neighborhoods that are like C to C plus neighborhoods where people still want to live there, but I can collect a lot in rent for them.
Hmm.
What would be your take on that or strategy around it?
Yeah, I wouldn't agree.
No? Okay, fair enough. Why?
Yeah, it's just the better. I wouldn't say you need an A plus neighborhood or an A neighborhood, but you
Right.
really need a place where people feel safe and comfortable and want to live. where they can go for a walk and they can be proud of their home, and they can create a sense of community where they get to know their neighbors a little bit, and because just the financials work better. I
Right.
mean, that's my experience with all the different properties we have.
Yeah. And you probably find, like I said, if people find it to be more homey, they're more likely to stay and commit longer as well. Is that right?
Yeah, and they look after their home, and the neighbors help each other a little bit,
Okay.
and it just um, and we get a little bit more rent, and the renovations cost the same, the maintenance costs the same,
Right.
but and then you just don't have all the challenges, the
Okay.
dealing with the social issues, because we have 2,700 different residents in different units, and we deal with so many social issues as it is.
Uh-huh.
uh, Drug addictions, criminal activity, all kinds of things.
Yeah.
And if we can be in the better neighborhoods, we reduce that. We really, really reduce all those challenges,
Okay.
which can be very costly. We've had three fires in units where the residents set the fire,
Oh, really?
and it ends up costing 50 to 80,000 to fix it, and the insurance deductible is 50,000. So we just
You just take care of
we eat
yourself
that.
so you don't have to increase your premium?
Yeah, we eat that
Right.
cost.
Right.
But it's the fire is caused because they passed out on the couch after they were drinking all night or
Right.
whatever
Right.
it
Right.
is.
Yeah. Yeah.
It's real challenges, and so I like the better neighborhoods for sure.
Interesting.
Not necessarily, it doesn't have to be the best building in Winnipeg,
Mm-hmm.
but somewhere a nice home.
Yeah. Yeah.
Yeah,
No, those are valid points.
yeah.
Um, so you've grown Thorwin quite a bit over the last few years, obviously, as well. And you mentioned like one of your most rewarding and proudest achievements is just like building a team that has a great culture. Like
Mhm.
how have you done that over the years? Like how have you built this team around you that's able to like, you do property management in-house. You have your own self-performed crews of carpenters and construction divisions.
Mhm.
You have a great team. How did you get from where you were to where you are now?
I don't know, it's just really trying to do the right thing every day,
Hmm.
and working slowly towards those goals, and with a mindset of continuous improvement, really.
Right.
And I don't know if things will ever be perfect or anything, but we're always striving to improve, and each of our properties, and that resident experience, and the team. We really work on culture too. I really want to have the entire Thorwin team working towards common goals as much as we can. It's and I think it's really a positive goal that we have. We really want to create homes for our residents, places that they can be proud of.
Yeah. Yeah.
And I really, one of my biggest rewards is seeing people living in the buildings, and doing their daily activities, and they're happy, enjoying the property.
Yeah.
That's it gives me some pride.
Yeah.
Yeah,
Absolutely.
yeah.
Interesting. We probably have some listeners that are interested in multifamily but have never been able to do it. Now, you mentioned a
Hmm.
lot of your buildings are smaller apartment buildings. Like, not every apartment building is 200 units.
Hmm.
Some of them are 8, 10, 15 units.
That's right.
How does like a first time investor get into that? Like, is there a way for them to um, get money maybe that isn't like that they don't have saved up to be able to invest in something like that? Or like, what would be your recommendation?
Yeah, the CMHC program uh, is really good for all investors, all Canadian investors, and you need a minimum of 5 units to do that.
Okay.
Um, and depending on, there's a few different programs through CMHC, so you can reduce your investment to 15%. potentially even lower depending on the circumstances. Probably 15% is about the lowest you can get to.
Okay.
Um,
Like 15% down.
15% down.
Okay.
Yeah.
Yeah.
And then that would be through an affordable program.
Right.
Probably. They do have an energy efficiency program as well, but that's harder because you'd have to invest to create the energy efficiency.
Yeah.
Um,
Hmm.
But you still do need to find that 15%. And how do you
Yeah.
find that 15%? That can be a challenge. So having some other source of income, maybe you can get debt on some other asset that you might have,
Right.
or be able to take out a personal loan or something, some way to get started.
Okay.
And yeah, I mean, finding a way, and it's a risk, but I don't see it as much of a risk, honestly.
Yeah.
Finding once you find that right property,
Okay.
and you do have to go out on a limb and learn a lot. It's challenging,
Right.
but and many people, they get discouraged with all the challenges when you own one or two properties, all the learning that you have to go through, and the challenges with the residents and the different government entities and rent control. And but if you can get through that period and get through those challenges, it can be very, very rewarding in the long term.
Interesting. You've mentioned a few times during our chat here, like if you find the right property, it's not a risk if it's the right property.
That's right.
Right? Like, in your eyes, like what defines the right property? Like, can you maybe like walk us through a deal that you've done in the last couple, 3, 4, 5 years where you saw the right property, why it was right, and why you jumped on that opportunity?
Of a number of aspects, I would say the biggest is the location. I mean,
Okay.
and I can't emphasize that enough. Like it has to be a place where people want to live.
Mm.
It's not a place where they're forced to live because they don't have a choice. It's a place where they want to live.
Okay.
And that's the biggest piece. And it might be near an employer or some sort of school, trade school or university, but it's a place where people, they're looking, they want to live there.
Mm-hmm.
They're not living in the building because they have no other option. That's sort of a fundamental thing for me. And then you can build on that because you can find those people that want to be there. You don't have to accept applicants that you don't want to accept.
Okay.
Because if you get the wrong people in your building, that can really cause some real challenges.
Right.
So that, to me, that's the first step. Some buildings will have discounts in the rent.
Right.
So they're not, the building's under rent control, but the owner isn't charging with what they're permitted to charge.
Okay.
So that can be an opportunity. It may mean that you need to invest in the building,
right.
But then you can raise the rents for whatever. It's typically a small amount, but you can get those rents increased quite quickly if you can make the unit worth it.
Right.
The property has to be worth that rent, of course. So that can be a very positive thing. And those buildings are around. Sometimes you can find them. Most owners and buildings that are under rent control, the rent is maxed out. And it's significantly been below the market. That's quite typical in Winnipeg for many, many buildings.
Okay.
Particularly, it's an individual owner. They don't understand rent control, and they don't want to do all the forms and all the applications, and so you end up with rents that are significantly below the market.
What's your definition of significantly below the market? Like 20%, 30%?
Oh, yeah, 20, 30, 40, 50%. I mean, Wow. It's surprising. Typically, those buildings the residents don't leave because the rent is so low.
Right.
Also, the residents will accept, sort of an irresponsible owner as well if the rent's low enough. So,
Yeah.
you have to resolve some of those challenges.
Okay.
I mean, my goal is to have a quality building and have the rents reflect that.
Right.
We do have probably 50% of our units that the rent is maxed out. So we're definitely under the market,
Okay.
but not by a lot. It might be 5%, 10% of the
Yeah.
market, maybe 20%, some of them, but not dramatically under the market like some buildings are.
What would you say, like you've acquired a lot of buildings over your time, over 2,500 units to your name right now. What would you say like your biggest mistake was on a deal you've made? Has there been a building where like you bought and something came to the surface and you immediately had buyer's remorse, or maybe you didn't do enough due diligence and it came back to bite you in the ass later? Like, do you have an example of something that, you had to learn the hard way that maybe our listeners can be like, oh, I never thought about that before?
Yeah. Several buildings in very bad locations
Okay.
that, in the hindsight, the pro forma looks great and the purchase price looks awesome. And you look at it and like, I'm going to be making all this money,
Right.
but it just doesn't happen because you can't get the rents. You can only collect 80-90% of the rent because you don't get paid.
Right.
And then your repairs and maintenance costs is way higher than you thought.
Right.
And then you have vandalism and theft and arson, and it just really is very difficult. So those buildings have been certainly buyer's remorse for some of those buildings, yes.
I guess that's why you said in the last question I asked you, location's number one now, right, for deals.
Absolutely. And I own some properties that are in, maybe you'd say, a C location.
Okay.
Which again is not bad, but it makes it difficult. You have more challenges, and when vacancy rates are really low in Winnipeg, then it's quite easy to fill the building because there's so much demand.
Right.
But now as vacancy rates are increasing slightly in Winnipeg, then it's harder to fill those units, and then you have to lower your rents quite quickly.
Mm-hmm.
And then you get a whole bunch of applicants, not necessarily good applicants. So you have to find an appropriate applicant, which can be difficult because the good applicants don't really want to live there because it's a C location,
Yeah.
So as vacancy goes up, the better residents, they move to a better neighborhood.
Okay.
And that definitely does happen.
Yeah. So in the last 15 years, you've grown your company tremendously, increased your portfolio. Tell me, like, where do you see yourself in 5 years from now? Let's say it's 2030. Where would you like Thorwin to be?
Well, we have several years of renovations to do right now, I think, actually. We bought quite a few properties that really need significant work, and we try to do it at a regular pace, not take on too much work at once because it becomes unmanageable.
Mm-hmm.
So I really want to get all of our buildings to a good quality standard, and they're not all there yet. We have work to do. And financially, we've got a lot of renewals coming up in 4 or 5 years. So 4, 5, 6 years. So we've got to go through that whole process of those renewals, and I don't know where interest rates will be at that point. Right. So
hard to predict that.
It's very difficult to predict.
Yeah.
If rates lower, then it could be very good. If rates go up, it could be very significantly different.
Yeah.
Interest rates are so crucial for our industry,
Mm-hmm.
and the government programs, CMHC, what their support is for the multifamily industry. That can change. But at that time, hopefully I can invest in some more good quality properties in Winnipeg, maybe other cities. I don't know.
Yeah.
Yeah.
Would you say that one of your like strategies would be like a lot of these buildings you purchase, you renovate them, and then the rent goes up a little bit to make up for that cost, and then
Mm-hmm.
you're on to the next building type of thing. So would you say like you buy a building, renovate it, now that building is worth more, you can refi from the bank, take that capital and use it towards another down payment on another building? Like, would you say that's a pretty,
Mm-hmm.
good strategy for real estate? Safe strategy?
That definitely is the plan. One of the challenges is most of my buildings now.
Yeah.
I took the 10-year term for the mortgage because rates were so low a few years ago that it was the best decision.
Mm-hmm.
So now we have equity building up in those buildings, and it slowly builds up over time as the buildings increase in value. Hopefully they do. And but we still have to wait for that 10-year period to end, because the prepayment penalties are so onerous right now. It just doesn't make sense to buy out the mortgages.
Right.
We do have various financing strategies that can take advantage of your recommendation there. And that certainly can work well. It particularly, maybe you do a short-term financing program with some construction financing, and then you get the building renovated, and then you go into CMHC financing. Once everything is completed, all that work is completed, and that can be a good strategy.
Okay. Like I know when you purchase a house, and if you were going to do that with a house, you're probably what you'd want to upgrade usually would probably be like a kitchen, right?
Mm-hmm.
That seems to add the most value when you renovate a house, I would say.
Mm-hmm.
But when you're renovating an apartment complex, what is the one? If you pick one thing to upgrade that's going to bring you the most value back, what is it?
The insides of the apartment.
Okay.
The residents, they don't care about your heating and your cooling, your sewer and your roof, and the windows or the outside aesthetic. They care about the look of the building, but certainly not the structure and all the systems in the building. The residents,
okay,
as long as it's warm, they
they
don't care.
Right.
But that the new feel of and we replace all the flooring, all the cabinets, the entire bathroom, typically
fresh paint
all
job.
those things.
It's amazing what a fresh coat of paint can do to a place.
Oh, and it dramatically changes the units. And adding dishwasher, like if you don't have a dishwasher in your apartment, you've got to drop your rent significantly.
Right.
Because pretty much everyone wants a dishwasher.
Yeah, absolutely, yeah.
But a lot of old buildings do not have dishwashers. And it's a real challenge. And adequate air conditioning, we really want to have, which can be a big challenge in the old buildings. Mm-hmm. It's really difficult. Basic sort of amenities, they can be simple, but
what are your thoughts on investing in buildings that have a balcony or not? Like, do you find a balcony makes a big difference about what type of person is going to rent your apartment, or not so much?
Not really.
No.
A balcony is a nice addition. I would say the resident would want more square footage within the unit.
Okay.
If the unit is more spacious.
Right.
That's a better selling feature than a balcony. People do like balconies, certainly.
Mm-hmm.
But it's not, it's not the be all end all.
It's a nice to have, not a
It's a nice to have. Yeah. It's in-suite laundry. that people love.
Yeah, that's a good point.
Yeah,
That's a good touching point. Yeah.
but it's difficult to install in older buildings. Extremely difficult.
Yeah.
The plumbing isn't there. The electrical isn't there.
Mm.
Space, it's a real challenge. But
Mm.
on any new construction, of course, you absolutely want in-suite laundry.
Interesting.
Yeah.
Last question, Kris, before we wrap this up. There's a lot of people, obviously, that want to get into real estate. They look at you as inspiration, right? You've got an awesome company. You've brought so much in-house property management, construction. You're building your portfolio out. If somebody was to come to you today, they've got a T4 job, they're an employee, but they want to start a side hustle in real estate. What's one piece of advice you'd give them?
Wow. You're up for a challenge. And you better be ready to accept challenges and the difficulties that will come. But it is very rewarding, and it's rewarding for your family and the future, because it will build wealth if you can get through the challenges. And it can be very rewarding as well with the service that's provided to the residents. But it is very, very challenging, and it's extremely long term.
Yeah, that's great advice. Actually, I didn't. I think a lot of people, when they get into real estate, they think of the wealth, right? But the point that you just brought up about it can be a very rewarding experience for the tenant as well. Like you're kind of giving back in a way. It's fulfillment as well. That's an important piece to not overlook.
No, I agree. It is.
Awesome.
Yes.
Well, thanks for being on the show today, Kris. This was a great episode, and I'm happy that you joined us.
Appreciate it. Thank you very much.
Awesome.